Welcome to Markets Now. I'm Michelle Rook along with DuWayne, Bosse with Bolt Marketing. We're seeing some mixed trade in the grains as we move through the mid-session with the livestock futures trading mostly lower. And let's talk about grains first off. Corn started off a little bit higher. We've been putting in weather premium. And what do you think? How much more weather premium do we need to put in the corn market, especially since we're going into a 3-day holiday? Will the market take a pause and wait till Monday night then to get back in?
Well, absolutely, but I don't think we're going to go any lower from today's levels at midday here. I think we
Okay.
might grind just a little bit higher going into the weekend, but I think you got two very tough resistance points. I think $6 on July corn in that 530 area for D's corn. At both those levels, we have farmers interested in selling old crop and new crop. So at that point, we probably meet farmers selling. But you're right, big holiday weekend with interesting weather all of a sudden. They say we're always 2 weeks away from a drought, and it's starting to feel that way right now, Michelle.
Yeah, so if that's the case, if we come back Monday night
Yeah.
and the weather looks like it's going to be pretty hot and dry for the next 2 weeks after that, then how much volume do you think the market needs to put in? Because it doesn't feel like we have that much now.
I would, I'm going to go out a limb and say quite a bit because we've penciled in and talked so much about this huge crop coming. Acres are going to get planted, record yields, which are trend line yields. I totally understand everything what USDA has done so far to this point, but I think we've lulled the bulls to sleep with that talk. So if we come back Monday night trade and find out Illinois is dry for another 2 weeks, I'd say you could put 50 cents on in a heck of a hurry. Remember, the funds are short corn right now. So
Right.
if they don't want to be short, it's going to be 50 cents in a heck of a hurry.
Yeah, just the fact that they're short may push the rally farther faster than normally.
Right.
Let's also talk about the fact that it is May 25th. It's the last planting date for a lot of the Northern Plains areas. You have your hat on today because you're ready to go out into the field and farm.
Right.
But how many of these acres aren't going to get planted or are going to get switched over from corn to beans or PP'd?
Yeah, it is a big day for Northeast South Dakota, much of North Dakota. It's the late plant date for corn. So starting tomorrow morning, I'll be putting in corn prevent plant claims. Sadly, for a lot of clients, not as much as I feared a couple of months ago, Michelle. And actually, many farmers are going to keep planting if they're not done with corn yet. On my farm, we're just really getting started. But that being said, the low areas that are wet starting tomorrow morning, if we're going to get them into for corn prevent plant, we're not going to go back in a week or 10 days and plant soybeans into those areas. The market just isn't suggesting us to do that. Where last year, the economics, the market kept rallying and rallying, and you felt good to go plant some late soybeans in there. So I think for North Dakota and maybe Northeast South Dakota, corn acres will be down a little bit, some prevent plant, and we'll have to see come the 30th. And the weather is a big determinant too. If we get some more rains before the 10th of June, then it's just less acres of both corn and soybeans.
Yeah, I know there's been a lot of talk that maybe some corn acres would switch over to beans, but I'm in the same camp as you that those acres just probably won't even get planted. But
Mhm.
soybeans have been a reluctant follower of corn here on this rally. So did we just run up into chart resistance or, the meal market made new lows yesterday? Is that holding that market back?
Yeah, that doesn't help. Soybean meal, we had great exports this morning. We have for about 3 weeks in a row as
You have, yeah.
Argentina just doesn't have the supply, right? So they're the leading global soybean meal exporter out there. So we're picking up some of that slack, but the futures market sure isn't showing it as we make new lows, and that bleeds into the raw soybeans then too. But boy, I would think that should find support pretty soon. Now, the early drought talk that started to materialize this week is geared more towards corn, and people feel like, well, beans can hang and last, and get a rain in August can make up for it. That might be true, but we got to remember our old crop soybean situation is very tight. Now, of course, exports are pretty slow, and they should be this time of year, but crush demand should be great. So now I'm a little surprised and a little disappointed in the soybean market this week, no doubt.
Well, you have to wonder if we're not seeing a little profit taking as well, because we did run up into some chart resistance on those patterns or those charts as well, too, didn't we?
Yeah, we sure did. So yeah, you're right. Some profit taking there, like you said, holiday weekend, it'll be end of the month right behind that. Nothing's really unheard of here anymore. But when you look though too, we're finding a bottom here at this $13 on July soybeans too. It's been a wide range, a wide bottom, but it feels like we're finding a little bit of support. And I think we should until we know a little bit more about the new crop and the acres. We
Right.
started to talk about the prevent plant and that. I'm still one that just believes that we have the total principal crop acres just too high. I don't see where we gain the acres. And with the prices falling as we get to those critical plant dates for North Dakota, there's no incentive to plant later. So you take 2 million acres off of corn and 1 million acres off beans, and then maybe we don't have trend line. And all of a sudden we got a bullish situation. Now that's a lot of ifs I just threw out there, but it is possible.
Yeah. The other thing that may be holding back corn and beans today is the fact that we just had pretty horrible exports for both. And we had cancellations, obviously, showing up on corn. I also have to wonder a little bit about the debt ceiling discussions. Is the market nervous about that at all?
It really isn't quite yet, which makes me nervous for the market.
Okay.
Yeah, everyone thinks it'll get done at the 11th hour, and I do as well. But if we get into next week and we don't have that deal done yet, the market might get a little nervous and look for more volatility. Believe it or not, it's just markets are going to stay crazy.
So wheat is back to the plus side. It certainly isn't because it got any help from export. So is this just all short covering, you think, going into this holiday weekend, or what?
This wheat market has been crazy this week, Michelle. I mean, you're up 20, you're down 20, and I'm looking for news and
Right.
can't really find it. I mean, every day you could read something about Russia, Ukraine, but the fact of the matter remains when you look at the exports, our commodities are too high priced for export. So the recent bull run of the last couple of years has rationed that demand. And that's something even the bulls have to remember in the back of their minds. So we need to just get a little cheaper, find some more demand. But boy, when I think of wheat, especially spring wheat, I don't know how many acres are getting planted, and it's late too, obviously. So crop isn't in the bin yet, I guess. And I know farmers are frustrated, but I think we can find some support. It wouldn't be surprised at all for me to see wheat actually be the leader out of this if we start to have a weather problem.
What about cattle? New contract highs at both feeders and live cattle this morning on the heels of this very strong cash trade yesterday, especially in the north. So is this profit taking or hedge pressure?
A little bit of both, but yeah, let's talk about the livestock market. That I can smile about and talk about how bullish I am and maybe
Not
finally right
hog.
on one of the, not hogs. Oh yeah. Oh, we have to talk about that one too. That one's pretty ugly. But the cattle first, yeah, higher cash cattle trade yesterday in a wide range too. Obviously, the south is at that discount to the north, but north, it seemed like as the day went on, you got just higher and higher prices. So that's good too. So I think we're up around 180 by the end. June seems like this discount's just too much for me right now. So I think that's why the market made new contract highs. And I think eventually we'll get that 170 we've been promising in June cattle.
All right. That market seems to be kind of sensitive to what's going on with the debt ceiling talks as well. So we'll see if,
It should be.
we can divorce ourselves from that or not. What about the hogs? Oh my gosh. Gap lower opening this morning into new contract lows. I thought it was cattle hog spread unwinding, but now it looks like it's much more than that.
This appears to be the flush. And it's really, when I watch it, Michelle, I think this is the flush we've been waiting for. This is a get me out no matter what. I don't care what the news is. Usually means a low. Now, I'll say that and then put the caveat in there that smart money won't buy and try to catch the falling knife. They'll wait for this market to bounce off these lows today, maybe trade higher tomorrow and then start to buy it. But you do have the cash market now, believe it or not, above the June board, which we've been talking the opposite way for so many months. But exports were okay around that 30,000. But to me, I think we're getting too cheap here in hogs. But I would have said that a week ago and gotten rolled over. So that's why you just watch the hog market from afar and watch it make a bottom before you try to jump in that one.
Right. Both supply and demand issues going on here that are negative, it seems. So we'll continue to watch it, unfortunately. All right. Thanks for joining us, DuWayne Bosse with Bolt Marketing, and that's Markets Now.